Welcome to Business Line. When US investment bank Goldman Sachs said last year that oil could fall as low as $20 per barrel, no one really took it seriously, rather as the most pessimistic scenario. It was too hard to believe it really might happen. Well, now it's hard to believe that it was just a year and a half ago that oil was trading at $114. Since the start of 2016, so for just around 2 weeks, oil prices have fallen by about 15%. With this fall, on the one hand, it's necessary to update the oil price forecast. But on the other hand, how could it be done amid this volatility? Recently, Merrill Lynch revised down its forecast for this year, seeing Brent averaging at $46 per barrel, blaming a combination of factors, including the strong dollar. But together with the other institutions, the investment bank notes that crude oil prices could fall as low as mid-$20 per barrel. The oil companies say even at the mid-$30 per barrel, oil prices aren't sustainable for many, as cheaper oil can create a high price for some to pay.
UK oil company BP is set to pay the price for plummeting prices. It has announced it is to shed 4,000 jobs globally, 600 of which will be lost from its North Sea operations. The job losses come as the company's profits continue to suffer as a result of a 70% collapse in prices. Benchmark Brent crude dropped to $30.6 per barrel. Analysts believe the price could fall further.
I think we all look to $20 at the moment, and of course there are predictions of $20. And I think that's the area, when you look at Saudi Arabia and the Middle Eastern producers, that's the area that it tends to get a little bit more difficult for them to make money off the back of the stockpiles that they have in place, not just producing it out of the ground.
The volatile trading in oil has prompted calls for an emergency meeting of the Organisation of the Petroleum Exporting Countries. But UAE Energy Minister Suhail bin Mohammed Al Mazrui said the current strategy was working and time was needed to allow it to happen, perhaps 1 to 1.5 years.
The oil-producing countries are also feeling the pain. Getting back to work after a long New Year break, Russia found itself in a challenging situation. Oil and gas make up the bulk of Russia's exports. And while the country was celebrating, the prices have fallen sharply. The Kremlin now has to find a way to balance its budget that was set on oil prices at around $50.
The Russian ruble tanked again on Monday as the week opened with the Russian currency under severe market pressure. A 10-day holiday period in Russia has come to an end, and traders are facing a public storm of price pressures and falling revenues from Russia's main export, oil. Russia's budget, set at $50 per barrel prices, is broken when prices are barely above $30. Ordinary people are starting to feel it in their pockets. We live outside the city and our pensions are very low. How do we survive on 8,000 rubles, about $106 a month? Medicines become more expensive along with food and housing expenses, so it's hard. Some forecast a stabilisation in oil prices this year, although the unknown factor is how quickly Iranian oil will return to the market with the end of sanctions, and in what quantities.
We do think that if oil prices stay where they are or fall to average about $30 per barrel this year, then we would expect the Russian economy to be in a kind of considerable recession for the second year running.
At current prices, Russia faces a more than 5% budget deficit this year, but some forecasts say the price could go as low as $20. It means that all Moscow's savings made during 10 years of high oil prices are all but gone.
If there is anyone who is happy with the cheaper oil, it's the consumers. The drivers have recently seen the price of petrol and diesel going down across Europe. But at the pump, they complain that the fuel doesn't correspond to the fall of the oil prices. Here is the report from a business correspondent in Athens, Simala Tuchtitou.
The theory of cheap oil for the motorist. How does it work, or does it? Tumbling prices and a global glut, but not at the pumps. Percentage price drops have not been matched on the forecourts, leaving individuals and businesses reaping no big benefit from the oil market lows. I drive many kilometres each day to show clients houses. You understand, the more expensive petrol gets, the heavier my operating costs grow. I pay out more than €350 each month for petrol. And though I see that oil prices are getting lower, petrol is not. Petrol prices do react to the oil market. Oil lost 70% of its value in the last year and a half. For the same period, the fall in petrol prices in Greece, for example, has been just 20%. For every 100 euros a Greek driver pays at a petrol station, just 33 euros go to the oil industry, to the country and company of production, the refinery and distribution companies. The remaining 67 euros goes to the state. Fuel taxes in Greece are high, but not the highest in Europe. If you're driving in the EU, then the average tax you will pay on a litre is 66%. Topping the tax league is the UK at 72%. It is ready revenue for government coffers and easy, say analysts, to impose and collect.
Traditionally, for many years, taxes have been imposed in European petrol industry because it's easy for the governments to get income. Bear in mind that across the Atlantic in USA, prices at the pump for the consumer are 1/3.
Will the tax level change in the EU? A Commission official would only say it will present its winter 2016 forecast in early February, which will reflect the latest energy developments.
How low can oil prices go? That seems to have become the million-dollar question. And although many now see $20 per barrel as the bottom low, it might go even lower. The market is waiting for Iran to return. The country has the fourth largest oil reserves in the world. In the first phase, once the sanctions are lifted, Iran will raise exports by 500,000 barrels a day within a week after the removal of international restrictions, plus another 500,000 within 6 months after the curbs end. We'll see if the other countries will be happy to see Iran coming back. Maybe they could swipe right or left to show their feelings. This is it. This is IT.
Have you ever wondered, how hot am I? Even if you're not into the online dating game, you might want to try Tinder to find out. Tinder is a popular mobile app, especially in the US, that allows you to meet potential partners. People seem to like its simplicity. All you have to do is download it and set up a profile. Now, remember to choose your photo carefully because on Tinder, it all comes down to physical appearance. Thanks to the GPS, the app will show you people in your area. When you like someone, you swipe right. When you don't, you swipe left. If you like someone who also likes you, Tinder will tell you that a match has been made and open a private chat. Born in 2012, the service already mustered an estimated 50 million users. In March 2015, a subscription-based premium version, Tinder Plus, was launched. And in November, Tinder's owner Match Group raised almost $400 million in its IPO. While investors swiped right on Tinder, someone tried to get a better understanding on how the app decides potential matchups. According to a report in Fast Company, users are secretly assigned a desirability rating through an algorithm based mainly on swipes. Of course, it's top secret, but even if you had the chance, would you and your self-esteem really want to know it? That was it. That was IT.
That was it for now. Thank you for watching, and we'll see you next week.